Retail investors are staying cautious despite the temporary tariff truce with China, according to Investopedia's latest investor sentiment survey. And here to break it down is Investopedia editor-in-chief Caleb Silver, who joins us on set, fresh with the results. So tell us what the retail investor is doing.
Yeah, hot off the presses. We kept this going over the weekend because we wanted to capture how people felt after the relaxation in the tariff situation there. And they're still cautiously optimistic, still a little bit worried, more than a little bit worried. I'd say 55% say they are cautiously optimistic. 18% are just downright worried. 28%, I should say, extremely worried. 31% say they're investing less due to the volatility. But we know there's another good chunk that stayed in this and we're buying the dips, right? Buying some of their favorite stocks on discount, irrespective of how they felt about how things were going. They saw discounts in stocks and they started buying.
So, Caleb, where exactly, because this survey also looks at where the action is. So where exactly, is it Mag 7 or is it more diversified than that?
Yeah, even more diversified than that. So we asked them, what are you buying? What are you holding? What are your favorite stocks? What would you buy now and hold for 10 years? That looks like the Mag 7, plus Berkshire Hathaway, plus some banks in there as well. So it's a pretty diversified crowd. Also, Ford creeping in to the top 10 this month as well. We look at Vander Research, which does great stuff on individual investors outside of their 401ks. That list is very interesting. When you look at some of the stocks they were buying, Ford is definitely on that list. But top of that list is Tesla on deep discount. They were buying that stock, one of the hardest buys they were buying over the last couple of months. So NVIDIA, Palantir, AMD, Amazon, Apple, Robinhood, American Airlines, Ford, and Meta, the top 10 retail buys over the last few weeks, even amid the chaos and the volatility. That's where individual investors that were buying were buying.
And Caleb, one of the things you also ask in your surveys is if you had, hypothetically, and I know this is tough, but if you had an extra 10 grand to invest, what would you do with it? So what exactly was the response there?
Yeah, that's the sort of the discretionary investing question. You could put this anywhere right now. Where would you put it? You'd think with the rally it would be back in individual stocks. It's not. People want to play it safe. They've seen what's happened. They're like, okay, we're back to where we were. But right now, the preponderance of people are saying money markets, CDs, and high-yield savings accounts, then index funds and ETFs, then you get to individual stocks. So sometimes when risk is on, it's definitely individual stocks and the rest are far behind. Right now, it's let me play it safe with this $10,000 and we'll see what else happens. They're happy with the recovery. They're just not convinced that it's going to continue or that we go higher from here.
Hence